So Peter, profits and customer numbers are up this year, and yet that's against a difficult economic background. How have you managed to achieve that?
Well, it has been a really good year for Provident Financial. Consumer Credit Division turned in a stable performance in pretty challenging conditions. But then Vanquis has clearly been the big driver of profit growth. We've enjoyed very strong acquisition of customers and also very good credit quality. And I suppose credit quality is the common theme that underpins the performance of both businesses. We've kept credit standards very tight and we've had a real focus on asset quality.
You mentioned the Consumer Credit Division, and yet profits are down here. What are you doing to grow that part of the business?
Well, let's just understand why the result is where it is. Our consumers have had real headwinds from particularly inflation, so higher household bills, higher fuel bills, higher energy costs, and that's meant that demand for credit's been a bit weaker than you might otherwise expect, and also we've been very cautious in terms of extending credit both to new and existing customers. So the backdrop has been difficult, but we have got a number of things that we're doing to try and get a bit more growth into the business sustainably through the medium term. So we're opening new branches, we're continuing to upgrade and modernise the product range. There'll be a reloadable card launch this year. We're doing more marketing, in particular more TV advertising. We're continuing to invest in technology and make sure our business is fit for the digital age that our customers are in, and we've also hired 3 new senior executives to help support that growth agenda.
Meanwhile, at Vanquis, business is growing very strongly. What's driving the performance there?
Well, I think underlying demand for the credit card products is very good. I guess to participate in modern life, in many respects, you need a credit card. You need a credit card to fly on a low-cost airline or to shop on Amazon or eBay. So credit cards are a product where consumers continue to see great utility. And in terms of our business focused on serving those customers that the high street banks don't want to serve, then we've enjoyed a period of very strong demand for our products and not a lot of competition.
Now, in the last year, you moved into Poland with a trial. How's that gone, and is international expansion the way ahead?
Well, we're 9 months into a 12-month trial in Poland, and it really needs 12 months in order to prove that we can scale up and build a viable business there. And we're really talking about managing credit quality and building the scorecards and the tools that are needed to grow the business. So 9 months in, things are progressing in line with plans. So we should expect an update on how we intend to take Poland forward in the summer, probably with our interim results.
And tell me about funding for the company as a whole. How secure is that?
Well, we're in great shape funding-wise. So with the headroom we have in our existing committed funding lines, along with the capacity that we have in Vanquis to take retail deposits, our funding's secure for 3 years out. So we've got enough funding to deal with all our growth plans and any maturities in the meantime right through to 2015. And actually, since the results were published, we've raised a further £65 million with a new retail bond issue, which closed very successfully last week.
There's lots of talk about regulating lenders such as yourselves. How much of a concern is that for you?
Well, in one of our businesses, we're already an FSA-regulated bank, so there's no change there. I guess the big change that's coming down the track is that the consumer credit regime operated by the OFT is going to move into the new Financial Conduct Authority. But we're very well placed to deal with that. We operate an industrial-scale business, so there'll be some more work to do, but I'm very confident we can deal with all the requirements that are coming down the track towards us.
And we've talked about 2012. How do you see 2013 shaping up?
Well, let's just go through the key points. Firstly, the balance sheet's in great shape, so from a funding and a capital perspective, we've got all the resources we need to develop our business. I think it'll still be a challenging year in terms of the economic environment. There's no sign of inflation abating, so probably continued headwinds for the customers of Consumer Credit Division. Within Vanquis Bank, though, we continue to acquire new customers at a very healthy rate. And the final thing is we made a very good start to the year in both our businesses, and that's in terms of collections, which is where the key focus is in February. So taking all those things in the round, I'm confident we've got another good year ahead.